Hey Harvesters, and welcome to the channel where we run simple and straightforward options trading to generate daily income. My name is Matt, and in today's video, I'm going to talk about the trades I executed for September 3rd. I'm also going to highlight September 2nd and August 29th because I didn't make a video for those. I was sick, sounded like a zombie, and didn't want to be in front of the microphone and the camera. So therefore, today will be a little bit of a catch-up video. And then also, we're going to talk about the last, I think, 98 or 99 trading days, see how my performance has played out during that time period. We're going to talk about my daily average, weekly average, monthly average, and then talk about everything in between. And then lastly, I'm going to talk about what I plan on doing for tomorrow, August 4th. So let's get this rolling. The first thing I like to talk about on my account is my account value ends at $175,600. Do this for two reasons. One, so you guys understand how much money I'm dealing with to generate this daily income or whenever I make my premium. And then just transparency. You guys are going to see my account go up and down every single day or when I happen to make these videos and I'm not sick. But yep, that's the Robinhood account. So let's head over to the spreadsheet and start talking about the numbers. All right. So looking on August 29th, we're going to kick off with that. That Friday, I only made $38.02 of premium or Robinhood cash. That was when the market took a little bit of a correction. Market cannot go up, 365 days a year. So there are some micro corrections, and we are in a little bit of a micro correction. And September, October is historically known for being, the lowest performing months of the year. We're coming off the, summer high, and then everything kind of like goes back to reality. Only made $38, $22 was premium, $16 was my Robinhood uninvested cash. I didn't make that much money in uninvested cash this time because I had a decent amount of margin usage after getting shares assigned here and there. So I had to utilize a little bit more margin, and I'll talk about how much margin costs I had to incur for August to still make a comparison versus how much premium I made versus how much margin I had to pay. So you guys will make a determination if that trade-off is worth it, and I'll also give my 2 cents on that. Then heading into yesterday, I made $624, and this does seem like a little bit of a high number for a Monday. You would think, oh man, that's super great. But most of my options I ran were all covered calls because I had a bunch of Oracle shares get assigned on that Friday. So I came into this week with about 500 shares of Oracle, and most of my options, even my QQQ ones, because the market was down a little bit, I chose to do a week-long expiration. So I have all of these options expiring on September 5th. So therefore, the upfront premium was going to be a little bit higher. So for me, I rather have locked in that premium because I didn't know what the market was going to do. Like the market could have continued going down, or then, yeah, I could have recovered and I could theoretically have made a little bit more money if I was more patient. But for my strategy, running these options myself, I like to take the upfront premium when I can get it. So that's exactly what I did. So I made $624, and then I'll dive into the individual strike prices that I chose when I move over to the other side of the spreadsheet, and then we'll discuss that later. And then for today, September 3rd, I only made about $72 of premium. That was just from a cash secured put. I am pretty tapped. I wouldn't say I'm pretty tapped out on margin. I still have a ton of buying power available, but I don't want to dig too deep into a margin hole, if you will. So I basically, from last week, I have about $100,000 of margin I'm using right now. So I think I'm utilizing about 60% compared to my cash. Ideally, I don't really want to go too much more than that. Just for the example, these next 2 months might not be strong. So I'd rather just, take it easy and play it safe. I'm also trying to adopt some of my long-term investing strategies and trying to figure out what works. Ideally, I could buy more shares with the amount of buying power I have and theoretically make more premium. However, I definitely think there's a little bit of risk tolerance. I have a high tolerance for risk, but I don't need to do that. And so I just rather play it safe for a little bit. And the market isn't hot right now. It actually might be a good time to invest into some undervalued stocks. So we'll see. But right now, definitely just want to keep everything status quo. Don't want to over tap into margin. Not a big fan of doing that. So end of the day throughout 2025, even though I've only traded about 99 trading days, I made $33,539 of premium and or realized appreciation gain. I like to track it in one number because this is what I'm going to have to pay taxes on. So it's just easy for me to calculate whatever my tax bracket is divided by how much premium I made. If you look at the percent return since running my own options, this doesn't account for the premium. This is just overall, change in value from my initial investment to what it is now. and we're up 19.88% on the year. And let's do a little side-by-side comparison with the SPY. So for yesterday or today, my account was up 0.81%. The SPY was up 0.53%. However, the previous days of September 2nd and August 29th, don't even look at August 29th, that was pretty bad. August 29th, because the reason why it went down a lot for my account is because Oracle shares itself went down. It just happened to be a dip. I think the stock's a great stock and it will recover, but definitely Friday was not a good day for Oracle. Went down compared to the SPY, was only down negative 0.41 versus, my trading day was negative 4.60. I'm not too worried about it. As long as I don't sell below my cost basis, I actually won't lose money on it. So I'm not too worried about it. I'll just keep running options until I have a favorable day, and then they'll get assigned away from me, and then I'll free up my margin. So no big deal there. And then for September 2nd, my account was down negative 0.93% compared to the SPY, was only down negative 0.74%. And then in total, since I started tracking my account versus the SPY back on August 20th, I'm up 0.41% versus the SPY is actually outperforming me today, 1.23%. Usually I am beating the SPY, but sometimes markets fluctuate, and we are at that point where it's beating me. All right, after talking about those data points, let's talk about my trade win percentage. I'm winning 97.96% of my trades. Had 96 winning days. I probably need to change this to 97 real quick because, technology. Technology. Sometimes you do have to put stuff in manually into a spreadsheet. Kind of crazy. All right, so had 97 winning days, 2 losing days. And as I said, I've only been doing this for 99 trading days. So basically started April 11th, was invested into high income ETFs, did not like the NAV erosion. I did not like whenever the market was in the red, these high income ETFs, high yield ETFs, whatever you want to call them, were definitely losing about 2 times or maybe 3x what just a normal buy and hold of the SPY or the QQQ was. So I decided to make an executive decision and stop investing in them. If you have like a small percentage and you're willing to do the risk, go forth and conquer. I'm not a fan of that. I'd rather just buy and hold good stock and then just sell covered calls against that. And then I don't have to experience any NAV erosion. So I would prefer that route any day of the week. Moving forward, the average amount of premium that I'm making per day is about $338. If you look at that as a weekly value, I'm averaging about $1,597 per week. And then per month, I'm averaging about $6,584. We did just finish August, and before August, it was somewhere around, I think, $6,300 or $6,400. And then because of my decent month last month, it went up. I think the average about $150. So it's at that $6,584. Taking a look at this average yearly premium, the reason why I created this as an estimate is because I didn't actually run, 12 months of data. So I am theoretically coming up with what a 12-month return would look like. So how did I do this? I took the amount of average weekly premium, multiplied it by 52 because we have 52 weeks in a year, and came up with this $83,000. And this number is based off of this. So it's off of my trading performance. I will say I am using a small sample size. I've only been doing this for 99 trading days. As time progresses and these numbers get more accurate, we have more bull runs, we have more little bear markets, little corrections, the numbers will eventually even out and they'll be more accurate the more and more I do this and the more videos I make. And as a average yearly percentage, that'd be about a 57% return. And what I've noticed thus far, it ranges somewhere between 49% to about 66%, depending on the day. I had a I had a very reasonable goal to achieve in 2025. Don't really even talk about it. Already beat it by about almost $4,000 now. And now let's talk about the estimated income over the years, coming on years. So the way I plan on operating this part of the spreadsheet is whenever I complete a year, I'm going to sell lock it with all of the correct information, how much income I made, what my taxes might look like, what my end of the year value is going to look like after taxes, and then what the net gain looks like after taxes, and then what's the actual percentage return. So once I finish 2025, basically whenever December 31st rolls around, so lock these numbers, and then the remaining columns will be based off of my trading performance. And then as I get more and more data to feed into this Excel spreadsheet, these numbers will be more and more accurate. But as it stands right now, this is what it is. So for 2025, I theoretically, when December 31st rolls around, or whenever the last trading day is, I should have made about $59,000. I think I'm well on track to do that, because if you look at how much premium and appreciation I've realized versus an estimated of what is coming down the pipe, if you add 25,553 to this 33,539, that is roughly around that $59,000 mark. So that's about accurate. Tax rate, high income earner, Uncle Sam's gonna steal my money, but it's okay. And then my end of the year value should, after I pull the taxes out, should be about $179,000. Cool. And then the reason why I am doing this project in the first place is like two main reasons. One, this allows me to have an emergency fund for the fact that, hey, if I get laid off today from my job, because I work in tech, so sometimes they just do 10% layoffs of the workforce, and you just might happen to be that part of that 10%. And then also AI is coming up. I might lose a job in 10 years from now. So therefore, this gives me a little bit of hope that even if something like that happens, I would be able to maintain some sort of income to maintain my current lifestyle and pay for all of my bills, food, groceries, cars, house over my head, shelter. So ideally, I'm doing it for contingency planning. And the second reason why I'm doing this is it would be very nice to just get off a W-2 income, and then it gives you the freedom to do what you want with your time. Because for me, I don't view money as a necessity would be the wrong word, but I don't view money as is like all giving God. For me, I view money as time. The more money you have, the more time you can get back in your life to actually do the things you want to. So that's how I view it. And any area in my life where I can potentially pay some extra money to then get some of my time back to then do other things, I usually tend to do that. Or it has to make sense. If the cost to time ratio doesn't make sense, then I won't do it. But if it does, then you bet your top dollar I'll pay money just so I can save some of my time to enjoy my life more. So that's kind of the reason. But look, I have two main points I'm looking at. 2030, I want to see how this project has progressed up to 2030. Am I really going to be making somewhere around $356,000 a year in premium and appreciation growth? If that's the case, I'm a 100% not working by 2030. But I have such a small data set from what I've done thus far in a relative bull market from April until today, September 3rd. So therefore, over that 5-year period, hopefully I should have been able to see a couple of different markets, high markets, low markets. So ideally, I'd have a more accurate number. And if by 2030 the numbers are half of this, half of $356,000 is a lot of money. That's $175,000. That's still plenty of money to live off of. But I think for that amount of money, I would still continue working because I still want to have like a relatively good lifestyle. So I think by 2035, we'd come up with another point. I say 2035 as like I would say a placeholder, because by 2030, if I'm making $915,000 a year, I'm not working. By 2032, if I'm making $669,000 a year, I'm not working. Like, even if it's half of that by 2032, just for me to not have to go into the office and do a job that I might not necessarily enjoy, but I need to, put a roof over my head, I'm probably going to take that opportunity. But I'm not going to know that until I actually start performing what these estimated incomes are displaying here. But that's kind of where I'm at. So 2035, I should be making somewhere around 1.7 million, with the caveat, if everything stays the same, my account should be somewhere around $4.1 million. And that would be a great fantasy. I always like to look at what 2058 numbers would look like. And if everything stayed exactly the same, I should be making about $2.3 billion. Excuse me. I will say, since the last three trading days, this number has gone down from I think 2.5 or 2.6 billion to 2.3. So it's crazy how a few kind of relatively red days can really affect what potential returns look like over a 30-year period. So it's actually quite interesting. And by 2058, I should have an account of $5.6 billion. This is almost kind of like a fantasy land joke for me, but not necessarily, joke's the wrong word, but it's definitely like a fantasy dream scenario. I ideally hope that happens, but nobody knows what life has in store for all of us. So yeah, let's head over to the weekly tracker. Yep, so for, oh, I did not add the $72. One moment. All right, quick little correction, had to add the $72 from today. So for this week, I'm up $696. I definitely think it might be a little bit of a stretch for me to hit the $1,000 a week club, that 4-digit club. Maybe one of these days I get lucky, but you know, from the cash secured puts I'm running, if I make somewhere between $100 to like $70, I'm definitely not going to hit that 4-digit club. But that's okay because I did have I had a pretty good week, pretty monster week last week, made $2,885. So they kind of like even out over time. You know, some weeks, you know, feast, some weeks famine. This week's kind of a light famine week, early precursor to a famine. We'll see. The monthly tracker, we just started September, and yep, it's going to be exactly the same as the weekly number, $696. And for the yearly tracker, we're at that $33,539, as I've mentioned before. And let me talk about the margin interest that I've accrued for August. So for August, you know, some days I had shares assigned, some days I didn't. But to me to make about $6,000, almost $7,000 of premium and appreciation growth, I only had to pay $250 of margin interest. And if I didn't use margin interest or I didn't use cash secured puts to help me propel my account forward, I would only make about half of what I'm making now, because I have an account of about 175,000, 180,000 on a green day. But if I only use my cash, I would be only receiving half of this return. So all of these numbers you're seeing for like April, May, June, July, August, imagine me making half of this number. So April, I would have only made $1,100. May, 4,000. June, you know, like 3,250. July, you know, 4,500. August, 3,500. But by me utilizing a little bit of margin, some days it's secured, some days it's not, depending on if my cash secured puts get assigned. But for me to make an additional, you know, 2x of what I could have been making just using my cash, I only had to pay $250.31 of margin interest to make an additional $3,000. I'm going to take that trade-off every single day of the week, no questions asked. So whenever people like get super scared about margin, yes, it's definitely good to be careful not overuse margin. But the problem is Robinhood makes the margin so cheap that for you to not use a little bit, I feel like you're definitely holding back some of their progress. I am not afraid to use margin, and I will use it for me to get to my goals faster. That's kind of where it is. I don't think I'll ever go to like 100% of my cash value margin, but I definitely think, you know, less than 70% is like a good touch point. So that's my thoughts on margin usage and how much margin interest I had to pay in August. So if you take away $250 away from, like, we'll say close to $7,000, I still made $6,750. That's a pretty solid month if you ask me. All right, let's head over to the other side of the spreadsheet. I'm not really going to talk about August and September 2nd. I'm just going to go straight into what I did for September 3rd because that's the most relevant and recent data. Here we are for September 3rd. I am going to talk about the gray, which is what I did for September 2nd. Basically had 500 shares of Oracle, and then I had 300 shares of the QQQ. I have different price points of when I bought in, and ideally I chose the strike prices that was slightly above my cost points or at my cost point. So for my QQQ shares that I bought at the 576.45, I think I did a 577 strike price. For the shares I bought at the 580, did a 580 and so forth. Don't want to bore you guys going through every single one, but ideally I just chose the strike price that the shares were assigned at because the market was red. I don't necessarily think it's going to go back up and hit those points, but if it does, these shares will get assigned away, and then we'll run you options, no problem there. But today I ran a cash secured put on the QQQ. I did have a little bit of margin collateral available to run a cash secured put, so I took advantage of it. Made about $72. Chose the 566 strike price for the cash secured put. QQQ opened at the 569.27, so it'd have to go down about $3. And today, the market looked a little bit stronger. There wasn't like a violent movement when the bell rang. So I decided to choose something about $3 away, which was in my favor. I think the delta was a 0.15, so it was like a 15% chance of it executing. Therefore, I went with that, and it played out well. The QQQ expired today at the 569.99, and that means that expired worthless, made $72, didn't have to incur any additional margin interest or get any more shares assigned. So that was a big win for me. I was pretty stoked about that. Cool. With that being said, I really only have one trade to do for tomorrow, and it's probably going to be another cash secured put on the QQQ. But let's head over to Robinhood and start talking about what my account looks like and some potential strike prices to look at. We are back at my Robinhood screen. As you guys can see, I do have that 500 shares of Oracle, and then I have 300 shares of QQQ. And let's dive into QQQ and head into trade QQQ options. That's a money printer. You press that button, you run a couple of covered calls or cash secured puts, and you start making money. It's wild. All right, so for expiration day, expiring tomorrow, which is a 0 days to expiry, let's see what we're looking at. QQQ at that 570.99. Actually, let's do a secured put. All of my covered calls are tapped out right now. So QQQ is at that 570.99, almost 571. So let's take a look at what some of this premium looks like. Should I be wild and just get this $197 of premium so I can get close to my 4-digit club, but then risk getting some of my shares assigned? That's debatable. Buying at the 570 wouldn't necessarily be a bad price, but I think I'll choose something maybe a little further away. I will say when the market does open, these premiums will probably lose about 25%, about 50% of its value. So I would expect this 570 strike price to be actually somewhere around maybe like $120. And this 569 will be like 80 bucks or 90 bucks, just from what I observed. But let's take a look at this 567. Yeah, whenever I run my cash secured puts, I like to run deltas of like 0.3 or 0.29. So like a 20 or 30% chance of them executing. And to make about $102, that doesn't seem like a bad bet for tomorrow. Because if the market does go down, I would like to get my QQQ shares at a decent price. And then $102 is a decent amount of premium. So I think ideally for tomorrow, I'll choose something at this 567. Looking at this 568, delta 0.35, that's actually not too bad. I really tend to avoid options when they start hitting the 40s. I'm sure this is going to hit that. Yeah. So this 569, I don't feel compelled to run this option because I think the 0.40%, there is a relative high chance of this executing. And I'm already tapped out on my situation with, the 500 shares of Oracle and then the 300 shares of QQQ. Ideally, I want to choose something that's not going to get assigned. You guys could run your strategies a different way. But I think this 567 would be a good price point to buy in it if they get assigned. I'd be able to sell that relatively quickly with where the market's at, and then a decent delta, decent premium. I think that's what I'm going to do for tomorrow, September 4th. Yeah, guys, that wraps up the video. I really don't have anything much more than that. If you guys have any questions about my strategy or what I plan on doing, hit me up in the comment section. Yeah, that's all I have. Let's stay locked in. Let's stay disciplined. Let's stay harvesting Matt out, and I'll see you at the next one.